Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. This channel is designed to help small companies, both public and private, gain exposure with potential consumers, investors, even partners. Take, for example, today's guest, CEO Allan Evans from Unusual Machines, ticker symbol UMAC. Unusual Machines primarily specializes in the production and sale of small drones and essential components. They are a market leader in FPV drones, first person view. They plan to leverage their position in first person view drones, continue organic growth, retail sales, and leverage that growth in retail to onshore production of critical drone components. Focus on component sales to the defense partners for FPV drones in US and Europe. Donald Trump Jr. recently joined their board. They are a former spinoff from Red Cat, which just won the SRR Army contract. And I'm going to let Allan tell you more in just a moment. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence. Hey everybody, Tim from Alpha Wolf Capital coming at you with a follow-up, and I'm excited for this one because it's one of my favorite stories and one of my favorite CEOs. We always have these very deep intellectual conversations. We just finished one. Now we're gonna do the interview. But Allan Evans with UMAC, Unusual Machines, in the house. What's happening, Allan?
Tim, a lot. There's apparently some movement in the markets. It's been a little interesting. Tariffs have been happening. I need to get a haircut. It's been an interesting week, I think, is really how I look at it. I don't know. Everything's on your end.
It is, you know, you and I talked about this before we hopped on. The volatility is clearly off the charts right now. But in my head, I don't feel as though there's only one negative outcome to all of this stuff that's going on. I understand there's a lot of uncertainty right now, and the markets hate uncertainty. That's a fact. Um, I do also think that there's no way we could have continued to go down the path we were going. That stuff like this at some point had to happen. So we're taking a little medicine right now, but I think ultimately smarter heads will prevail. How that all works out, I don't know. But I think a lot of companies are getting taken to the woodshed that probably don't deserve to be taken to the woodshed if tariffs indeed do go through. I think if tariffs go through, I think that's a benefit to you, wouldn't it? Wouldn't that be a benefit?
Oh yeah, no, it's phenomenal for us. Like margin expansion, market expansion, price competitiveness. If 100 people are lined up to run the race in the drone industry and there's a bear, like all you have to do is be number one, and there are 99 people that are going to get eaten by the bear first. So it has a little bit of an impact on us, but the relative impact is the least on us. And even now, even the idea of tariffs, they're causing people that they do their next designs, whatever else, to want to work with us to design us and to remove the uncertainty. So not even in a world of tariffs do we win, which has been a weird positive for us. In a world of uncertainty around tariffs, we win because we don't have that uncertainty as a supplier. So for us as a company, like a little bit luxury to get to sit around and watch and not be too worried. And then from a more macro perspective, we have a lot of cash and a low burn rate, which we did intentionally. So I can just be like, oh, neat markets. Let's see what happens when it normalizes.
Right. And we will get back to normalization. It's not like we're going to stay in this period of uncertainty forever. Right.
Man, if we go up 10% and down 10% each day, every day, I'm going to quit my job as a CEO and just become a swing trader. Right? Like, there's just no, this will settle out. I mean, there's a lot of uncertainty, and then I agree with your general perspective that, obviously from our end, we saw the decoupling from China coming for quite a while, right? We're 18 months into onshoring or diversifying our supply chain. So we have the advantage of being like, hey, this is probably going to happen. Uh, and it's happening faster and maybe more dramatically than we thought. But in certain ways, this tariff function on both sides is going to drive the capitalism, the businesses to naturally solve the supply chain rather than just banning companies and doing it through regulation. So it creates an interesting little twist to the whole thing. But I would agree that I think since COVID, we noticed it was becoming unsustainable in terms of like in the world, there are only one or two places that make a thing. And for the good of the world, maybe we want a little more redundancy, global geopolitical redundancy in how those things are made.
Right. And I was going to say that as well, right? I think COVID was a real wake up call for not just for us and for the world, right? I mean, I can think of a lot of companies that were impacted big time by the supply chain. Can think of one company, syringes. They paid for all
Yep.
syringes up front, okay, and that inventory was meant to be theirs. And then when COVID hit, guess what? All those syringes that they paid up for, well, they went to the highest bidder, right? So they had no syringes, even though that was earmarked for them. That put a glaring light on a problem. Look, we needed syringes, right? And we couldn't get syringes. So I mean,
Yep.
that's a problem. So having some redundancies, as you say, we need to have that. It has to happen, right? We can't be reliant on one country to send all our stuff over because
And it's not even relying on the country, it's on the companies inside that country.
right,
But people aren't perfect. The world is obviously messy. And I think the last 50 years of globalization have created a whole lot of these single critical points in weird places and in weird ways, right? Like COVID also showed the automakers were missing a chip, so they had to park all the cars. And you're like, but there's no one else who makes the chip, right? Like, wait, no, not really. Or, in like a non-Chinese version, Samsung pretty dominates OLED. So like if a tidal wave wiped out Samsung, like the next iPhones are going to be LCD, like, and you're like, wait, okay, it doesn't even need to be negative versus, you see it for conflict or whatever else, right? Like if that happens, then these supply chains all get disrupted. And that we figured that would be true, like obviously for UMAC, for the drone industry, because it's critical to defense as part of the supply chain and as diversification. But I think if you go back to COVID, you see pandemic, you see other uh, sort of uncertainties, crises in the world where humanity and everybody's benefited by this diversified supply chain. And I think these tariffs will cause businesses to sort of figure it out.
right. And ultimately, that's who's going to fix it, right? It's going to be the individual businesses that realize, hey, we can't have it this way. We have to, and then the investors have to accept the fact that yes, we're going to have to put a manufacturing facility in a place where it costs more to have employees, right?
Yeah, it ultimately comes down to the investors. Like if there's another company, NewMac, making drone parts in Vietnam, and shareholders give us a better multiple and better support, even if our PE isn't as good because they believe in what we're doing, that ultimately sets where the businesses end up. So I think, your audience has a lot of ability to manage that. I think Tesla's a great example, right? Tesla traded at a huge multiple because people wanted to see a carbon-free future. They wanted to see self-driving cars. They wanted to see these things that are now here and awesome. And that's really where the pressure comes from.
Right, right. Uh, that is a good example, right? I mean, and we can see how quickly that can turn too. right? I mean, people that bought Teslas are trying to do the right thing for the environment. And, in the blink of an eye, because Elon Musk got involved with Doge and uncovered a bunch of stuff that we should all be angry about. Now, the media is calling him a Nazi and calling him this and that, and it's affecting the company. I mean, but he put himself in that spotlight, right? So he's kind of like the bad guy, but I don't view him as the bad guy. I see him as a guy that has done, and probably will continue to do things that benefit humanity in the long run.
Yeah, I mean, I think when you look at it, Tesla is an icon for Musk. He does SpaceX and a bunch of other stuff. But, one of the things I wonder is, let's say he resigned as CEO of Tesla and went to do Doge. Like maybe none of this would happen. So there is some uncertainty for me of like the intertwined parameters because he works all the time and on a lot of stuff. I look, I'm the CEO of a small public company. I can't do anything else. So yeah, yeah. There's just not it's amazing to me where I'm like, I can do this one.
Right. He's got eight, right?
At least that we know of. He put two of them together though, his AI company and Twitter, so he's reducing.
Right. I remember watching him one time. He did an interview, and people were like, "Boy, well, I'd love to be Elon Musk." And I remember very clearly him saying, because he just has constant information coming into his brain. It's nonstop. He can't shut it off. I can't even imagine what that would be like to have that constant barrage of stuff filtering into your brain, right? And he said, if people knew what I go through every day, they would not want to be me.
Yeah, no, I don't want to be him. Oh, no thanks. I'm happy being me. I get to do this at a fun level, I get to hang out with people like you and don't have to listen to my demons scream at me all the time to do better, even though I managed to change the future. Like, this is perfect. We'll go change drones. It'll be enough, you
What
know?
What's interesting about your industry is, regardless of how tariffs work out, the drone industry is not. You're not going to have. Like DJI is not going to come back and be a dominant force in the United States. It's just not going to happen, right?
That's right.
Because of the fact, because of the sensitivity of the product and what could possibly happen, and with the chips that go into these things, right? That's not going to change. That's going to stay no matter how this all plays out. So I would say you're fairly in a protected industry, right?
Yeah, I think with the current the world being the way it is and everybody feeling certain ways that there's going to be strong favoritism toward domestic producers for things that fly around in the sky. I don't think we're going to go buy Venezuelan jets. Like, I think we'll continue to support Boeing. Just because if you go all the way back to 9/11, you can see the risk when you lose control of the sky. And so with DJI being kicked out, and I think the realization of drones, like DJI leaving is $10 billion alone in a vacuum in a marketplace. And then drones are generally cost down. So even in a recession, moving to drones is a way to save money. So, I mean, tariffs, because we're domestically manufacturing, we do the value segment. So we're price competitive in an industry that's used to cost down, where there's a $10 billion market void today and is expected to grow. Like, that's a wave that'll take you into shore. I'm here for it. Like, we just got to not screw it up. And it's got a lot more momentum than we expected when we started. Like, we made some assumptions, and we talked about this if you go way back in time to when we first started this, or even when I was the CEO at Red Cat. We said, okay, look, we're going to decouple from China. We that's our assumption. We assume that it happened with drones. It's drone parts next. Our assumptions look right, and so now we're 18 months ahead. like now it's just don't screw it up. Our cap table's clean. We got cash. We got a low burn rate. We're every quarter's been record revenue. Our margins are improving. Like, yeah, okay, okay.
What's the primary focus right now, Alan? I mean,
Motors. In January, late January, T Motor, which is an amazing Chinese company that makes uh, probably most 50 to 70% of the motors for drones in the backpack size category globally, got put on the sanctions list in the US, which means nobody can send cash over to them. And the other companies that you'd replace them with are also in China, like the other great companies at a value. And so we were going as fast as we can to build out motor production.
right.
It's 50 to $100 million TAM today, like on top of the other stuff we're doing. And there's an opportunity to go grab 70% of the market. And I say that because there's going to be two winners. They'll get none of the rest of the major primes are going to want sole source dependency. So I'm sure they'll go support a second place company. So, somebody will have 70% of the market, somebody will have 30%, and either way, it's a win. So, we want that number one slot. So we're trying to go as fast as we can, and we think we're well positioned. But if we get the number two slot, okay, you're still talking about $30 million a year in revenue for like a good try, you
Right.
know? And
Right.
okay, you know, so we're going as fast as we can after that. Everything else we have, we've already done a very good job building out sort of redundant, diversified non-Chinese supply chains because we've been operating under that assumption that we talked about that we would decouple for the last 18 months.
Okay. There's been some. I've seen a lot of speculation around stock twits and that because of the whole tariff environment right now, the controllers, there's issues about, I don't know, being tied to Samsung somehow. I'm not exactly sure what.
Oh, that sounds like a red cap problem.
Oh,
It's
okay.
true of government phones. So all the US government phones are dual use, which we try to emulate on, and they're all Samsung S20s or S23s
Okay.
because they're made and then they put a reasonable build of Android on it. So yeah, pretty much everybody in the government uses Samsung phone, and then all the touchscreen interfaces all use the same like Samsung phone or tablet base.
Okay. So that
Mhm.
so that is an issue at the moment. I mean, is it an issue right now?
And we're pretty good friends with South Korea. Like nobody makes stuff that good in the US. Like Apple does manufacturing in India and China. So it's like where are you going to get the panels? Where are you going to get the finished things? And the tariffs will add to the cost, but I mean, trying to do it some other way, which so um, you know,
Right. You UMAC itself, so you're going after the motors, which I think is, I mean, when you say you're going after it as hard as you can, what exactly does that entail?
we ordered manufacturing equipment. We're probably signing a lease tomorrow or next week to quadruple our manufacturing space. We're building out stuff. I mean, we're going as fast as we can.
Okay.
Like we have the money, we did the math. It doesn't hurt our time horizon, and it's like full speed. We were getting a little in front of this, so we hired Brad Mello to be our VP of manufacturing before this ban happened. So we are already starting. So again, we anticipated it, but they really could have waited another couple months to put the ban in place. I'd have liked more of a head start.
So
So
what's Brad's background? What's Brad's background?
he helped build the Tesla 3 factory and then built his own company doing keyboards. He's a really sharp guy.
Okay. Okay.
But anyway, he's really leading the push with our CEO Andrew Camden. And again, like I feel like the Oklahoma Sooners. Like we got about a mile into Oklahoma before they fired the gun on this one. So now, ooh, those horses got to ride.
Yeah.
A
I mean,
little head start still.
I remember the first time we met and you saying, look, could we be early? Yeah, we could be early, right? But your timing, if you look at it, has been pretty much on point, right?
Thank you. Yeah, no, we made some assumptions, and that's how you win. Like, how do you get there first? Figure out you got to go there before other people do, you know? And I think we've been pretty good at that. And I think we'll continue to be. And the benefit is now we're pretty well positioned. We have really great customers. We have a great team. And it's like if you look too, every quarter's been our best quarter. We're not we don't overpromise, right? We just kind of go do our job. And one of the most interesting things is people are like, oh, where's the big contract or whatever? Look, no customer is bigger than 5%.
And that's the way I'd love to see it stay.
Yeah. So is there going to be a big contract? No. Like it's going to be really boring. And it's going to be boop ba-doop 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 ba-doop. And people look around and be like, oh, what happened? No, it's not exciting. We're not here to be exciting. We're here to fix the problem.
Right.
Like it's great.
And you've got a great head start, right? So, I mean,
Yeah.
you're at an interesting spot. We'll talk about this, right? Actually, right. Actually, let's talk about it right now. Because the chart, I was looking at the chart before we hopped on, and I'm saying, okay, this is actually a pretty critical area. We got a meltdown in the markets happening today. You're really
Hmm.
participating in that meltdown, right? You're kind of holding up right here at this level. What has happened is we filled this gap, which I'm really super happy that that actually happened. And you're at this level where there's potentially $5. $5 is a good psychological number, right? So you fall below five, and that people start to maybe freak out a little bit. But where I see you have really solid support is right around $4.70. I think there's some really good support there because that's where you broke out. Where you broke out above 470, that's when it had that run up to basically $24, right? Now you've come back an awful lot. Now since then, you've also done an acquisition, and now you're in the midst. You paid off all your debt,
Yeah, no debt.
uh, structured the company pretty damn well. I mean, you got some cash now, like you just said, right? And you are able
Yep.
to move quickly. You're nimble. Yes.
Yeah.
And you've been ahead of the curve. I think you're going to stay ahead of the curve. And because, like you just said, even with the tariff, no matter how the tariffs fall, you're getting more phone calls right now, right?
Yeah.
You're
And
getting
once you're
more
designed in, you're designed in. So whether the tariffs are in place, which we're prepared for, or they're not, like once people buy from us and they realize we're a good supplier, you don't change. Like you don't change your supply chain if you don't have to. So these tariffs, these bans are forcing everyone to consider their supply chain. And now the tariffs are forcing them to look domestically. And then there's us, the only ones being like, people are like, oh, everybody else is saying it's 6 months till we ship. We're like, we have hundreds in stock. How many do you want? They're like, and once those relationships are established and you're a supplier, they don't change again. So this disruption is great. It's great for us. Like, and it could all go away. And then we would have those relationships. It would still be great for us. So like it could end tomorrow and it's perfect.
well,
It could also continue and it's fine.
because it's just going to open more doors, I think, right?
Yeah, like you can't move supply chains overnight. So whether it's 2 weeks or 3 months, like we're not gonna really, nobody's gonna make the decision to invest in the capex until there's certainty around this. And so we'll keep getting the phone calls. And then what I think you're gonna see, because we're in a continuing resolution year and drones are cost down, particularly for the Defense Department. I think you're going to see some really interesting macros. The first thing you're going to see is, oh, they're going to have to spend money in a use it or lose it year. And I think drones will become interesting again. And so I think we'll move back to some of those better growth multiples, like drone euphoria time. So I think that alone will cause positive pressure, plus the cash coming in, plus us being a supplier. And that could happen anytime between like right now and October. But once that happens, like drones are back. And if you look at our chart, It looks kind of like Red Cat's chart or Ondas Holdings chart, or right. You'd be like, if you put them all up there, you'd be like, oh, drone multiples. And so I think those will come ripping back. And then the other thing that people don't realize is when the markets crash like this, private financing goes bone dry. Like if you're trying to raise venture capital or private equity right now, you are the saddest panda in the zoo. Like there is just no
Yeah,
no
you know what?
money
That's
to
an
be had.
absolute fact. I just talked to a buddy of mine who's got 3 companies trying to bring public. He said,
Yeah, no, done.
cannot get any funding anywhere.
Anywhere, anywhere. So what happens when the markets recover? We're a domestic tariff winning drone company with a heartbeat that's better than the other drone companies. Drone euphoria happens, and then nobody else can get any money. Discount shopping, like high quality stuff on clearance sale. And so then like we're in a position to go snowball this thing with like the best rates on the planet. And so that's why you'd look like people called me. Our S3 is for $1 billion. Right. Is that crazy? Yeah. Until you realize that once it's all there, like there are deals on the table that would never be there. I
Right.
mean, I'll make some up that won't happen because they're they're probably a little too big, but like our corporate structure would look like a merger with Anduril. Like if they wanted to go public, we could merge with them. We'd be the junior partner, but our whole corporate structure, our trading base, our S3, everything, they'd be like, yeah, super clean, let's do it. Like that would otherwise not even be in the realm of imagination. So we're in a position as we see the recovery in the public markets, particularly in our sector, particularly because these just help us win from an operating basis. So our numbers are going to look good to then take advantage of a macro situation where there's public to private arbitrage after one of the greatest crashes of all time. So when you say timing, I would agree. We've got like not only do we anticipate, and in this case, our S3 is an example of us anticipating dry wells everywhere and people being thirsty, like yeah, we will take the luck too. But I think we're in just a fantastic position, and all these events really lend themselves to favoring what we're doing. And I think then the craziest thing is in a week or two, people aren't just going to buy back into the market. They go look to cherry pick the recovery stocks. I just get to do my princess wave as we float by. Like, come on. Uh,
Which brings up an interesting point because I did notice that your short interest has had a spike a little bit, right?
mhm.
And I think to myself, I think to myself, that's a fantastic thing because here, and yet yesterday is a very good example of how quickly the markets can turn, right? Fear is a great motivator to get weak hands out, right? And a lot of times, I mean, there was a for years. What was there's a newspaper that every time that would have a like the doomsday scenario on the front cover of that newspaper, that was typically the time when you should be backing up the truck and loading up as much as you could possibly get in, right? Because that when it peaks, when that fear peaks, that is typically the turning point for the market, right? And we've got some rampant fear right now. And I think over a lot of speculation, right? When that sentiment turns, it's going to be a rip your face off, especially in the names that make sense, right? And this is a name in my head. I don't care how you just made a super awesome point, which is there are probably a lot of deals out there right now in corporate America, right? It's good companies with good products or services that don't deserve to be where they're potentially priced right now and without an ability to raise money.
for at least the next 6 months. So not even an inability to raise money now, but a time horizon where, like, if you're looking at your runway and you got 9 months of runway and you're not trying to figure it out, you're gonna crash.
Right.
Mm-hmm.
So what makes sense to do when you're facing something like that? Find a great dance partner, right?
Yeah, yeah,
Find somebody that's got cash, that's got a vision, and has a head start that you can, you know, bolt onto. Essentially, bolt-ons. I love bolt-ons, right?
yeah. Not, I mean, yeah. There's a bunch of different options. I mean, it's a little ridiculous. When I was in college, I lived on an honors floor
Yeah.
in what was otherwise an all-girls dorm. And some people went on a date with me that I never should have been on dates with because, when there aren't that many people to go out with and they're proximate, like, so I would say it kind of reminds me of that, where, like, well, we're here, and it doesn't matter how you feel about me because your options are limited. And I think and we don't have to do any of that. At the same time, we don't have to bolt
Right,
on.
right. You're
Our
in a
burn
great
isn't bad. So we just get to decide. But we're going to get so many very valuable looks at things that could be just otherwise totally inaccessible to us, and that's super exciting.
That is exciting. That's the flip side of moments like this. It creates
Yeah,
it creates opportunity, right?
yeah, yeah, exactly. And so surviving a moment like this, like, we're not in a position where we got to go do a weird structured deal just to pay payroll, right? Like, we're good. And so, I try to look at every one of these events as a chance to build the company for 10 years from now, not for 2 months from now. And so if you look at it with that time horizon, and a year ago we IPO'd at $4 a share. After a major market meltdown, we're still more than 20% up year over year, like from when we came out. So, we keep that time horizon as an attitude. And that's where I think when you look, I think we're pretty well positioned. And I think 6 months from now, people who are buying now are going to feel really good about it.
Yeah, I think the S3 freaks everybody out, right? Oh my God.
We told everybody we were doing it on the earnings
I know
call.
you're one of the most transparent people on the planet when it comes to, I mean, you're laying out the pathway, but
Yeah.
it's a very strategic and smart pathway, right? And look at the position that you are in now, which I don't think there's a whole bunch of companies out there that are in that kind of position. So this is people are not valuing this company the way they should be valuing this company, in my mind.
Well, it's a chance for people to hop in now and make some money.
You don't want them to just buy one share?
Oh no, one share is fine. One share is fine. I actually don't even mind the short interest because it means they're paying attention. Like, I'm more interested in converting those shorts into longs than I am about saying screw the shorts. Like, you take a short position, you get burned. You take a short position, you get burned. You take a short position, you get burned. Then you think maybe I should just take a long position.
Why fight the tape, right? I mean, I think the meat is off the bone. Did you deserve to have a valuation at $25 a share? Probably not, right? Probably not. Where do you? Well, I'm not gonna ask you. You can't answer that anyway. Bottom line is, I don't think they're getting the value correct at this current level.
What I would say, and I say this publicly, is if you look at our revenue versus where we're valued, we have just normal growth multiples. We are still getting growth multiples. So I'm not going to sit here and be like, we're underpriced or whatever. We are getting growth multiples for sure. And what I think we're going to see is people are underestimating the speed at which the drone market could materialize. And so I think that's where you see the higher multiples earlier in the year when people thought Trump would deploy capital sooner or his administration. I think you're going to see that capital deployed later. But um, there's a pretty good analogy that I think of. If you look back in time, do you remember when China put in place the Great Firewall?
Yeah,
And they kicked out Facebook and Amazon and Google. It was a few years later that Tencent, Alibaba, Baidu showed up. they're three of the 10 largest companies in the world now, like 20 years later. Um, the same thing is happening with drones. Like DJI and T-Motor are being kicked out of the US. And so this is a regulatorily created mega void. And so the second it actually turns on, I think the growth curve is going to dwarf what people are familiar with, because you don't have to make the market, you don't have to find the product, you don't have to explain it to customer. You literally just have to replace what they already have. And that is so much faster and so much easier than making a market. And it enables sort of once in a lifetime growth. There's another example. The only other time I can think of is I was in college when the smoking ban was put in place. And this company that I never heard of, Juul,
Oh
was
yeah.
a $30 billion company 18 months later, because again, a regulatory market with demand creates such a vacuum. And so I think we're perfectly fine growth multiple. I'm not going to sit here and say that like it's not reasonable, but what I think people are underestimating is that this is a vacuum, regulatorily created vacuum market where when it goes, it's going to go so fast. And the regulations kick in starting in December with the American Securities Drone Act. And then a year from that with Section 1709, which kicks DJI and Autel out of the US entirely. So we're lined up right before the legislative moment where things get kicked out. They're passing laws, bipartisan, locked in. We see the tariffs to start to warm it up, and I think we're going to see a lot of government money show up. So when you start to put all that together, the question isn't what is our value. The question is who's going to be sucked into that vacuum and who's positioned to ride the vortex. And then what's it look like over the 2 or 3 years where it happens. And so that's really how we're trying to set ourselves up, is to be drawn into that. And that's where I think we can create um, really solid opportunities for people, assuming some of our assumptions are right. But even better, the more recent crash has moved a whole bunch of people to cash. And so when everybody's in cash, they're starting to look again. And so I think, I think from our perspective, companies like ours in certain industries could really see like a V-shaped recovery.
I'll tell you what I see. I read an article the other day about the S&P 500 and
Mhm.
how Trump, it was a play on words, has woke Wall Street to valuations might be a little on the high side because the average has been 16 times earnings, right?
Mhm.
And for the longest time since we had the 2008 meltdown and we started printing money,
Mhm.
the PE ratio has gone to 30, which is double the norm. Now, what's deceiving about the article is not that the entire S&P 500 is trading at a multiple of 30. It's the Magnificent Seven that have a weighting in the S&P 500 that is quite significant. So when Apple, Nvidia, Microsoft sneeze, the entire S&P 500 gets a cold. Now that doesn't mean that all of the companies in this S&P 500 are trading at a PE of 30. They're not, right? There's a lot of companies in there that haven't done jack shit in the last 5 years. It's been the Magnificent Seven, and that was unsustainable. So what has happened now is that money has to go somewhere, right? These funds cannot stay in cash. They have a mandate, which is put your money to work somewhere, right? I would say that there are a whole bunch of companies out there like UMAC that are positioned well, that are in a, this is a growing industry. We've talked about it before. We don't even know all of the applications of what drones are going to be used for.
No, it's everything. It's going to be awesome.
But you did walk me through an exercise of autonomous vehicles. Could you share that with the audience just for us? Because I think that is such
Oh,
a powerful.
oh yeah, no problem. No problem. I think like one of the things you'll see the administration do, particularly because of Musk's involvement, is move to enable a regulatory environment that supports autonomous vehicles because it's super deflationary. So if you look on average, people spend an hour a day driving in the US. Let's call it 400 million people. Let's pay them $50 an hour, right? Like then, okay, I'll pay me that to drive for an hour. It's about $2 billion a day. So you're talking about $700 billion in just driver value created if you just enable autonomous cars. Not to mention the reduction in accidents, the ability to have stuff delivered, the reduction in logistics costs, the change in property value. So just moving over to self-driving cars is about a trillion, at least $1 trillion a year in direct deflationary value in terms of benefits to everybody. And it's super egalitarian because generally the people on the lower end of the income spectrum have more like worse trouble with access to transportation, and it opens it up and makes it cheaper and makes other things like delivery cheaper. So I think there's some actions that are being taken like that, or like the implementation of the same thing for drones, that can really overwhelm even some of the inflationary pressure from tariffs. And so, I wouldn't be surprised to see those things happen in the next 12 to 18 months, which is, again, further positive catalyst for our business and a really powerful way to keep America at the front of everything, right? By enabling technologies and stuff built on technologies while creating just massive deflationary energy that, keeps everything in balance. So, I think you could see stuff like that come out of the administration as well. And I'm like, well, that's also good for our business. Tariffs plus autonomy in the airspace, plus you're like, and well, we're going to be fine, you know?
You're going to be more than fine. You're going to be more than fine. I think you are positioned. This is an exciting time, and in my head, on a volatile day like today, for your stock to be basically just kind of hanging tough, that to me is a very positive sign after technically closing an open gap on the daily. Right now, you're I think in a very good spot, even if you just tread water here for a little bit. Um, and then as your execution of what you're trying to get accomplished with the motors, and as that starts to come to fruition, people get a better understanding of exactly where you guys are, right?
Yeah, yeah, and we're patient. Like, you can invest whenever you feel comfortable. Yeah. You can sell whenever you feel comfortable. Like, people call me up and they're like, "Oh, it went up so fast, I had to sell." I'm like, "Great, I'm glad you made money."
Right.
Like, yeah, I'm not here to be mad at people taking gains. That's great too. Like,
So let
we're
me ask
here
you a
to,
question. If some of these guys sold their stock at, let's just say they were selling it at 12 or
yeah,
15 or whatever,
yeah,
they made some money, right?
yeah,
Yeah, that money, who knows where that money's probably sitting on the sidelines right now.
probably.
Might be looking for places to put some cash to work. This might be a level that would grab some people's attention that made a bunch of money in your stock.
Yeah, I think, if you look at the people who've been around a long time, listen, paid attention, see opportunity, listen to what I said about opportunity. They look around and they think, "Oh, now might be opportunity." You figure we're going to announce our next quarter middle of May. You figure the Russell rebalances at the end of May.
Oh yeah.
With this market down and our market cap, like we can get in the Russell rebalance, and now we've created a snowball going into drone euphoria. There could be a thing there. I don't know. You also know that like okay, $5 a share below that's penny stock land, and kicks us out of certain institutional
Fun.
investors.
Yeah.
So it's not just a nice number; it's like a pretty safe number, right? I'm not here to do anything stupid and like have people have to trade out. Like that'd be dumb. So if you sit here and you look at all of it, you'd be like, huh, I'll buy one share. I'll see if it happens.
The beautiful thing about you too, Allan, is you do understand the capital markets, right? You got a good understanding of capital markets.
I appreciate that. I I could always learn more, just put it that way. But uh, you, if you don't, then you don't understand that half of your business, right? Like I came out of the operating side, so I felt like I had to put in a whole lot of extra work to understand the capital markets. And I think it's important to, that's why we broadcast everything, is because we're not looking to surprise anyone. You know, I look at a cap table more like venture, like the best investor I have is an investor I have. Like those are the people that care. They believe in what we're doing. And so I think it's important to communicate what we're trying to do and when we succeed and fail, so that the people that really invest, that believe in what we're trying to do, onshoring drone production, like supporting a healthy ecosystem for critical technologies, so they don't uh, we appreciate them the most as investors, because they're here to really support what we're doing. They believe in it. They believe in what we believe in. And I think it is worthwhile for them to understand that we do care about their share price going up as investors as well. And to not exhibit that is to, I think, take these really wonderful investors and supporters for granted. And that's one thing we don't want to do. Like, so if they don't think, or we don't demonstrate that we see how this works in the long term, so that through their support, they can enable realize financial gains as well as sort of supply chain gains and resiliency gains, then I think we're not doing them a favor.
Right. And that's why you're so transparent.
Yeah, because uh, they trust us to do a thing. So why can't we trust people with the information on what we plan on doing? And I'm looking for that trust over any small short-term price fluctuation, because that trust is how we build a giant company over 3 to 5 years rather than over 3 to 5 months.
You know, Wall Street is very transactional in a lot of ways, right?
And I love it.
And that's what I think most CEOs do not recognize, right? And a lot of times, like they're very good at what they do. They're very good at their industries. They do not understand what makes the capital markets function. And that is oftentimes that's what kills companies, right? They wait to the last minute. They don't raise money when they can raise money. They raise money when they need money, and that's too bad.
Mhm.
Should have been raising money when you could, right?
Or try to do what we do and try not to need raise too much money. Lower the burn, you know?
Sure. Yes, I mean, and those are the things that companies. That's what kills them, man. And you are not that guy. You are a very focused. You have a plan. What you did with the balance sheet already proves that, right? I mean, you're not just talking the talk, you're walking the walk.
Yeah, and again, it's I think you're totally right. Wall Street's transactional, which I love. Investors are not, and I think that's the disconnect where people forget. Like, oh, I can go do this transactional thing, but these people support you or don't. And
Right.
they either believe in you and trust you or they don't. And once you lose that trust, it's almost impossible to get it back. So, you know, we really appreciate everybody who buys the stock, holds the stock, trades in and out, like the guys at 12 who are looking to want to come back in, right? Like if they don't trust us, they walk away with their gains, and they've had a great trade, and that's it. So, you know,
So
we take
just thought
that
of two
seriously.
really big things that I wanna make sure I highlight. Number one is the Russell rebalancing, right? Odds are, and I'm not making any guarantees here, but odds are, I think you're going to be part of that. I don't know which Russell you'll be part of. It's the 1,000, the 2,000, or the 3,000, but I got a feeling you're going to be in one of them for sure, right?
It'd be great.
And then the other thing that you brought up, which I really want to highlight, is the fact that $5 is a crucial level, and here's why: because there are funds that cannot have shares of stock in a company that is trading below five. Most of the funds have the $1. That's the $1 spot, right? That's why the $1 is always so important. But the other one for the bigger funds is $5, right? So that's why this becomes a pretty critical area of support. Maybe that's why you've got some. It's not a super high number on your shorts, but there was a rise, and that could be, I would say, not financially astute traders that could be positioning themselves in a bit of a rough spot, right? So because they're underestimating the amount of institutional support that you're likely to have at this level. I'm just going to throw it out there like that. I love it. All
I
right.
don't know why you would support a tariff benefiting US drone company these multiples, like especially when if it runs, you know how it can run. Like, it's fine. Do it. Like, it just feels like a low expected value choice. I mean, that's my take.
Yeah.
But whatever. But people, it's their money. They can do what they want. And like I said, I'm just here to convert them into longs.
Right. And you're here to be you're here to build the company for the long run. You're not trying to build a quick flip.
No, we believe in our fundamental thesis that we need diversity of supply chain and the assumptions we made. And if we do it for a quick flip, then we failed to remember why we're here. And I think again, we betray the investors that have supported us. So no, we're here to build a globally resilient drone parts supply chain, and we've really focused on the parts that are dominated by China. We're not there to compete with parts where there's already other producers. So I think we've really focused on that niche and we targeted it, and it's now working out. And so we're still going as fast as we can to do it.
When do
And
you think you could raise the victory flag and say we've achieved what we wanted to achieve? At what point do you think that happens?
You know, the Chinese companies are really good, like T-Motor and DJI. And I think when in the US we catch up to them and remember they're going to keep going forward, that's when we can finally raise the victory flag and say we did it. When we have that Tencent, Baidu, Alibaba moment where we're as good as the US companies that have gone forward, like we have to do the reverse. So we're not competing with other US companies. I mean, we are for the segmented market, but we really view our competition as those really great Chinese companies that we're replacing. And we're not as good as they are yet. And until we catch up to where they're going and meet them there, then we can't raise the flag all the way.
So when UMAC becomes a household name, right? When everybody's talking about unusual machines, that probably be the time when you can say, yeah, we did that. We created
I
that.
don't, I don't know if anybody will talk about unusual machines, but maybe about our customers, right? Like how many people sit around and talk about Bosch?
That's true. That's
But
true.
they talk about Tesla, they talk about GM. So I think when people are talking about our customers as household names, that's when we've won. And that's what I'm excited about because I also prefer to be like, I like to go out to a restaurant and have nobody know who I am. So the best part about all this is we can get there and I'm still invisible.
I don't think you're gonna stay invisible, man. I got
As long as I can, I'll keep changing my hairstyle. I'll grow it long. It'll get weird. Keep it dynamic.
I love it. All right, Alan, you feel as though we missed anything, man?
No, I always appreciate it. I always feel like we go too long. It's for the 8 people that watch that really
You
care. And
know what? I'm going to tell you something right now. This is this show, or this is about educating people, man. This isn't this and showing the who's leading the charge. This is not a dumb guy. This is not a dumb guy. So a 10-minute conversation. Who knows if you're a dumb guy or not, right? Maybe you read some script before we hopped on. We've talked about a lot of things right now. This is not a dumb guy. I would not want to bet against this guy. That's what I'm
I,
trying to show people.
yeah, I appreciate it. Like you can bet against our guesses. Maybe we guess wrong, but if we guess right, we got to win. That's how I look at it. But again, I really appreciate whoever in the audience actually watched this far. You're awesome. Thank you for caring. Like, but let me just put that out there. I appreciate your interest in what we're doing, and so thank you. I just figure, whoever they are, they deserve a little credit too. They tolerate our winding road, man.
Look, investors will watch this far. Traders will have shut it off 15 minutes in. That's the fact,
Perfect.
right?
Perfect. Right
No
around the
problem.
Elon Musk self-driving conversation. Yeah. Okay. We know where we day tuned out.
All right, hold on 1 second, man. I want to shut this off.
No problem. Thanks, Tim.
So, when do you think we should? When do you think we should have a follow up? Hey there, folks. I hope you enjoyed today's interview with CEO Allan Evans from Unusual Machines, ticker symbol UMAC. If you did enjoy today's video, do us a favor, give us a like. How about giving us a share? While you're at it, make sure you smash that subscribe button. All of those things are extremely important to us here at Alpha Wolf Capital, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.